Coming up on Market to Market, the president enlists world leaders to help with his uphill domestic trade battle. Drought fuels wildfires out west while water conservation lags. And the financial impact of legal cannabis in the Mile High City. Those stories and market analysis with Ted Seifried next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, August 5 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. More Americans went back to work last month while the economy had trouble shaking off some economic blues. According to the Labor Department, the unemployment rate held steady at 4.9% as more people started looking for work. High-wage jobs for architects and engineers were among the pool of 255,000 positions created in June. While a promising sign, the Commerce Department revealed orders for factory goods fell 1.5% last month. This was paired with a trade deficit of $44.5 billion in imported products. And the Creighton University Rural Main Street Index continued its 11th straight month below growth neutral. The 10-state survey fell more than 4 points to 39.8 after a steady improvement over the past quarter. The search for solutions to bolster the economy also can be found in the political arena. One case of Capitol Hill gridlock involving 12 nations and 40% of the world's gross domestic product shows no sign of breaking. And as Peter Tubbs found out, this is one vehicle in the political traffic jam the administration hopes to trade in for a win.
President Obama this week reiterated his support for the landmark global trade deals that has attracted political fire during the presidential campaign. Obama discussed the Trans-Pacific Partnership with Singaporean Prime Minister Lee Hsien Loong during a visit to the White House.
America's endurance, policies, and actions have contributed greatly to this current peace and prosperity. Not only will the TPP benefit American workers and businesses, it will send a clear signal and a vital signal that America will continue to lead in the Asia-Pacific and enhance the partnerships that link our destinies together.
Those destinies are currently running an uphill path. Hillary Clinton and Donald Trump have both gone on record against the TPP on the presidential campaign trail. This week, 6 Republicans in the U.S. House of Representatives sent a letter to the White House discouraging a vote on the trade pact during the lame duck period between the November election and the January inauguration. The letter signals widespread opposition in Congress to the TPP specifically and to trade deals generally. Along with the potential for the migration of U.S. jobs overseas, opponents of the pact are concerned about currency manipulation controls between member nations. While the political class of each TPP country is in favor of the pact, the working class in each country has been opposed. Concerns about low-cost imported goods overwhelming local producers and a loss of national sovereignty have driven massive protests. President Obama believes he has the better argument.
It's not possible to cut ourselves off, given how integrated our economies are. And trying to pull up a drawbridge on trade would only hurt us and hurt our workers. So the answer is to make sure that globalization and trade is working for us, not against us. And that's why today we are reaffirming our commitment to the Trans-Pacific Partnership.
From Market to Market, I'm Peter Tubbs.
Extreme weather forces have been raising their battle flags for some time. The West has been dry for nearly half a decade. Producer Paul Yeager found out the lingering conditions have reduced water levels in area reservoirs and spawned massive forest fires.
While the California wildfire season is the second most devastating in 4 years, it's still well behind last year's damaging summer. The National Interagency Fire Center in Boise, Idaho, reports nearly 3.5 million acres have been charred and more than 34,000 wildfires in 2016. That's just a little behind the 10-year average. Currently, a dozen states are reporting large blazes. One of the biggest is north of Big Sur on California's central coast. It was started by an unattended campfire July 22nd. More than 5,500 personnel are working the fire in steep, forested terrain. Penalties are possible for those responsible for starting the blaze. The possibility for more fires is high. The Fire Center released an outlook this week revealing above normal wildland fire potential for August from California through Wyoming.
We're also going to see parts of Texas and a good portion of the southeastern United States start to increase in activity as recent dry periods this summer have left fuels very dry. And as we approach the fall leaf drop, we'll start to see an increase in potential fires there.
Much of the fire forecast follows the conditions laid out in the Drought Monitor. The University of Nebraska's weekly report indicates intensifying drought in much of the same areas at risk for wildfire. The West has experienced more dry conditions the last 3 months, in addition to an area from Mississippi through North Carolina. Overall, last week, nearly 51% of the contiguous U.S. was in some form of drought. That's the lowest since October of 2015. This week's drop to just over 50% was a slight improvement due mostly to rains in the eastern two-thirds of the country. However, locally heavy precipitation failed to bring significant drought relief. Downpours like this one in Phoenix, Arizona, caused a major problem in Tuesday evening's commute. The heavy monsoon stranded drivers, prompting water rescues. Even as intense drought remains for much of California, residents conserved less water in June than state officials hoped. As the Golden State endures its 5th year of parched conditions, new locally controlled regulations took the place of mandated conservation instituted by Governor Jerry Brown. Some water districts indicate they have enough water in reserve they could sustain another 3 years of drought. Statewide consumption was down 21.5% in June, a drop of 6 percentage points from a year earlier. The entire state has reduced water use by 24% over the last 13 months, which is close to the 25% target. For Market to Market, I'm Paul Yeager.
In the 1960s, marijuana usage was a symbol of the counterculture movement. At that time, the drug had been illegal for nearly 30 years and carried hefty fines and jail terms for its possession. A movement started for the legalization of the controversial substance. After almost 8 decades, voters in some states have transformed cannabis into a prescription medicine and a legal recreational substance. As John Torpy found out, despite the sometimes heated debate, the economic impact of legal cannabis sales is undeniable.
Marijuana's recent time in the spotlight and the grow light may have many states seeing green this November. On Election Day this year, voters in several states will decide whether or not marijuana should be made legal for recreational use by adults. Other states will have medical marijuana measures on the ballot. In either case, cannabis is riding a positive wave that is made out of mountains of money.
As first, I would start by asking which way you're most comfortable consuming, whether it be smoke.
In 2000, the state constitution of Colorado was amended by voters to allow patients and caregivers the legal right to grow and use medical marijuana. A decade later, activists for medical cannabis pushed for a state-regulated distribution system in the hopes of keeping the legal dispensaries up and running in the Mile High City. The bill that passed gave structure to a fledgling industry that, in the eyes of the federal government, is illegal. Industry insiders, like Meg Sanders, the CEO of the cannabis retail store Mindful, described the early days of the business as being a bit like the Wild West.
Most of us that are still in this industry today kept telling ourselves, this is what has to happen when you're building an industry and a business, and it's highly regulated of all of these things, you know, of which at that time frame, we were all growing enough plants to go to federal prison. I mean, we just were.
In 2012, the voters changed Colorado's constitution again to become the first state in the U.S. to approve recreational use of marijuana for adults by adopting Amendment 64. The new law made the tiny and heavily regulated medical marijuana industry a model for blossoming retail enterprises. Growers and governments on either side of the Continental Divide were pushed under the microscope. Officials in other states and countries around the world were watching how the details of producing and selling recreational cannabis will get sorted out.
What's really interesting about that time frame of when legalization happened here in this state, it changed everything about the dynamic of the industry, including it becoming much more legitimized.
And with that legitimacy came a lot of cash. On January 1st, 2014, 18 retail marijuana stores opened in the city of Denver. In the first year of business, the marijuana industry added $22 million to the city's general fund. For fiscal year 2015, taxable revenue from cannabis sales made up 2.5% of Denver's budget, adding almost $30 million to the city's coffers. In 2016, gross marijuana sales of retail and medical cannabis reached just over $853 million in the city and county of Denver. And just over $9 million in taxes from marijuana sales has been injected into various city departments, including education, law enforcement, and public health. For growers, Amendment 64 has brought new players.
What's nice is we're actually seeing the smart money come to the table that is actually not just bringing money, but they're bringing resources, they're bringing their talents, and they're investing not just their dollar, but themselves into this space.
Yeah, usually they come in 10 servings. When you have the
Currently, there are 221 dispensaries conducting business in Denver. The Mile High City put a cap on new storefronts, and officials are keeping a close eye on the new money and ideas coming to the table. Dan Rowland, a policy and communications advisor with the city of Denver, says that for the business to continue thriving, pro-pot or not, requires a well-balanced relationship between city, industry, and community.
There's no sense in trying to put it back in the box. You know, this is something that, again, the voters asked for and wanted. We knew there was demand for it and a marketplace for it. It's more about managing it correctly and making sure that everyone's voices is heard in the process and understanding what the effects are on the city and managing those appropriately.
Some of the industry's growing pains include what to do with all the profits. Because marijuana is labeled a Schedule I narcotic by the federal government, bank officials are refusing to accept any money from cannabis retailers for fear of losing their federal insurance. Dispensary owners are left to make all of their deals in cash.
I feel like we go above and beyond in our communities. We're always going to have people that just don't care for this.
As Denver and other Colorado communities blaze retail trails for cannabis, everything that happens will be closely monitored by the worldwide community. The issue of marijuana legalization will be appearing on ballots in November of 2016. California, Nevada, Maine, and Massachusetts are considering recreational use, while Missouri, Arkansas, and Florida have put medical marijuana up for a vote.
very nice triangle kush right there.
And as the business of growing and selling marijuana gains momentum, industry insiders say it's only the beginning.
Right now, I think we're dealing with, this tiny little finite amount of customer base. And then you never have enough product. That's the one thing in Colorado, there just is still not enough product. It's amazing to me.
For Market to Market, I'm John Torpy.
Next, the Market to Market report.
The commodity market spent a large share of their time fending off reports of good growing weather and predictions of more than adequate supplies. To finish mixed. For the week, September wheat grew 8 cents, while the nearby corn contract declined 10 cents. Sun and rain at the right times woke sleeping bears as the September soybean contract lost 32 cents. September meal went along, falling $15.50 per ton. In the softs, December cotton gained $2.70 per hundredweight. Over in the dairy parlor, September Class 3 milk futures advanced 40 cents. The livestock sector finished mixed as the October cattle contract moved $3.80 higher. September feeders improved $8.62, and the October lean hog contract continued its search for a floor, losing 75 cents. In the currency markets, the U.S. dollar index added 65 points. Crude oil gained a scant 20 cents per barrel. Gold lost $23 per ounce, and the Goldman Sachs Commodity Index lost more than 2 points to finish the week at 341.40. Here now to lend us his insight on these and other trends is one of our regular market analysts, Ted Seifried. Ted, welcome back.
Hey, thanks for having me.
We are glad to have you here. This is the first week in quite a while we have seen substantive gains in this wheat market.
Yeah.
We're up 8 cents on the nearby. What tripped that trigger? Dollars higher?
Dollars higher. Well, the dollar has come down pretty well over the last couple of weeks. So, take that in with a grain of salt. As far as the wheat market's concerned, we've had some issues with the European crop. We're talking about France. Now there's some talk about Germany having some issues. So while these aren't areas that are going to be big enough production areas that are going to have a very significant impact on the global balance sheet and really increase our exports significantly, you do wonder if maybe the worst of the news for the wheat market might be behind us now at this point. And you've got a very large speculative position, very large fund position that is very short. And if these guys need to get out of the short position or start to peel back on that short position, it could have a very large impact on trading in wheat and could give us higher prices without having any real good fundamental reason to do it. But at this point, you do wonder if most of the negative news has been factored in already.
Are you putting positions in place today in this wheat market to count on that move higher as those shorts come out?
I would not aggressively be buying wheat futures at the moment. And I'm not so sure that we've got the lows in right now. However, what we have done is we've started to buy a little bit of the wheat calls, and call spreads in particular, to maybe offset some of the production sold at harvest. Just to give us a chance to participate in a fund-led short covering rally, something of that nature. But I don't want to be very spendy because my confidence isn't very high that wheat's going straight up from here.
Okay.
But it's a better time now than, say, hindsight's 2020, but I feel more comfortable doing something like that now than a few weeks ago.
All right. Now let's talk about this corn market. Down another 10 cents. We continue to get yield estimates in the 172, 176, 175 range.
Yep.
What does that take us here on price?
Yeah, I've been talking for a couple weeks now that, as we lead up to that August WASDE report, we're going to start hearing a lot of yield estimates. And those yield estimates are mostly going to be based off of the good to excellent condition that the USDA NASS gives us. So at 76% good to excellent, that's 6% better than last year. Last year, we came up with a 168.4 national average yield. This year, the USDA is looking at 168 as trend line. So the fact that we're 6% better has guys adding onto that yield pretty significantly. And I understand that from a statistical basis. I get that. But I do wonder about that because these USDA numbers or the NASS numbers, crop conditions numbers, aren't a perfect science. So take soybeans, for example. I know we're talking about corn, but take soybeans, for example. In 2014, we never dropped below 70% good to excellent. And we ended the year with a 47.5 national average yield. Last year, 2015, we never got above a 65% good to excellent, and we ended up with a record yield of 48 national average. So, there's a big difference there. Yeah. Almost 10 percentage points, and yet we had a higher crop on the lower rated year. So we got to take these USDA numbers with a grain of salt. You wonder what lingering effects this heat has had on the corn. You wonder about test weights. You wonder about kernel depth. You wonder about tip back.
And all of these things kind of lead us to our Twitter question I want to throw to you. Sure. As we get A little closer to harvest, this one's from Adam in Woden, Iowa. On Twitter, he asked, to what extent will the markets believe upcoming crop tour yield reports? Once we get past USDA next week, will we put a lot of strength behind these crop tours that go out in the countryside?
Yes, and that's a great question. Because statistically, we know that it's a good rated crop. And we know that the USDA's model really favors, for corn, rainfall during the month of July. We know we had a lot of rain, but we also had a lot of heat. So there's a big question mark this year as to what sort of effects that had.
Okay.
I would much rather listen to a crop tour than a statistical analysis. You've got to use both of them because you got to understand that the USDA is heavily weighting on their crop conditions.
All right.
But the crop tours are going to answer some questions. And I'm really looking forward to it.
Now, we are going to dig into this topic deeper on our Market Plus segment that you can find online. We want to talk demand with Ted Seifried. But next, I want to jump into the soybean market. Another 32 cents to the downside, Ted. Where's the floor in this market?
Well, the global end users seem to think that the floor could be somewhere in this general neighborhood. I mean, if you look at the last 8 days, we've had significant export sales on the daily flash report. So, and then we saw on Thursday we had a very good export sales report, which really even predated a lot of these sales as well. So, global end users are stepping up to the plate, suggesting that we're at good value here. You could see this number. You could see bean prices come down between now and our harvest lows. And I think you will, because again, just like corn, I think we're going to start hearing higher and higher yield estimates. But you do wonder, I mean, how much lower do we go from here? I mean, because demand is really very solid at these levels.
Are we looking back at those mid $8 as a floor on this market, that wintertime trade we saw in the Nova contract?
Very much depends on where we end up with national average yield.
Okay.
You know, the bigger the yield, the bigger the carryover, the more demand, the more we can absorb this spike in demand that we've seen recently.
Okay.
You know, what we do know is that demand is good and improving. And a lot of times that's a really good sign that the global end users, which are pretty savvy, are feeling like that we're at value here. But if that yield continues to creep up and that demand isn't taking a whole lot away from the carryover, well, we still might have some work to do to the downside. So we'll see. And the month of August is still a very, very key month for soybeans.
And we're just getting started.
A lot to be determined there yet.
As we've started the month of August, we have seen this nice rally in live cattle futures continue. We put another almost $4 on this week. And yet this week, we were also greeted by news that now we are going to begin trade with Brazil, both directions. We've got a question from Rodney in Edgar, Wisconsin. What implications will that Brazil have on this live cattle market?
Oh, that's a great question, Rodney. Any answer I'm going to give you right now is speculation.
Okay.
Because I don't really know for sure what's going to happen with that. But like you said, that's trade going both ways. So, you know, the bright side of that is that, hey, that opens up the door to more exports potentially. You know, for corn, we're going to be sending more corn to Brazil because of their crop issues that they've had. So that potential is great, but it can come the other way too. So I think that you want to look at it as a positive sign for the market or a positive input to the market. But cautious optimism, I think, is the way to go with that.
Do you think we're getting close to a top in here? Are we aggressively selling this rally, or do we have more room to the upside?
No, you look at commitment of traders here today. You know, there was some pretty significant buying here this week. Close above the 50-day moving average. That was very nice. Yesterday, we trimmed a lot of the gains and came back down and tested key support. We answered that with a nice bounce higher here again today. I'm looking for the October lives to go and push the 118, hopefully into the 120 area. And then we might be looking at some pretty significant resistance. But I think it's looking good for now.
Okay.
Of a little concern is that, you know, we did leave that gap down on that chart near the lows. And at some point, we might have to go test that. If we do, though, what we could be doing is putting in a multi-year low, potentially. But in the near term, I'd like to see more upside potential. The price action feels good to me.
Okay.
So I'm not aggressively selling cattle just quite yet.
Feeder cattle, almost $9 higher this week. Can we take out 150?
Well, in talking about the live cattle, I like a feeder-led rally, you know. So can we? I don't know. That's going to be, the 150 level is a big technical and also psychological resistance level. So that is going to be proving ground. That is going to be a big test. And we'll have to see what we do when we get there. I would not be surprised to see a pullback from that level before we maybe try it again. We try it more than one time or more than 2 times. You keep knocking on that door. Eventually, you think you're going to get through.
Yeah.
But I wouldn't be surprised to find some selling in front of that, just because we know it's resistance. And yeah, absolutely.
Lean hogs. Can we buy this lean hog market yet, or do we have more room to the downside? You talk about knocking on that door.
Yeah.
Every week we're knocking on that door, and every week it opens to another stairway to the downside.
That's absolutely right. And we get very, very oversold to levels on the RSI, Relative Strength Index, that are considered extreme cases of being oversold. And then we have a little tiny bounce and trade sideways just for a brief enough period of time, but long enough to correct those RSIs a little bit, and then we slam it again. I don't know. It's really difficult to think that hogs have that much more downside potential left in them from where we stand. Yes, fundamentals are a bit bearish compared to what we were looking at just even 3 or 4 months ago, but we factored that into the market, and then some maybe.
And the bearish factors, we've known supplies are growing. Is it primarily the drop in export demand? Is that the lead of the bearish factors?
Well, the drop in export demand is part of it, but exports as a whole. The drop in export demand, but not only that, disappointment that the export demand hasn't really gotten stronger. We've been hoping or really planning on exports to get strong, especially from Southeast Asia, China in particular, and that's just really never shown up. So a lot of these bullish speculative bets that had been made in hogs based on the idea that we were going to see this big influx of Chinese exports, that never happened, and that had to come out. Now, you think that we could be getting close to that, and you do wonder. Chinese made some cancellations. This is a game that they like to play before they make some bigger purchases, potentially.
Perfect. Ted, we'll pick this up in the Market Plus. Thank you so much.
Absolutely, my pleasure.
That wraps up the broadcast portion of Market to Market, but Ted and I will keep the market conversation going, including answering more of your questions during Market Plus, available on our website. While you're there, check out the Market to Market Classroom. It's a place where students of all ages can find stories on the business, technology, and science of agriculture. And join us again next week when we'll examine how USDA is throwing dairy producers a lifeline. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.